Hello, good afternoon, good evening, everybody. Good evening, good evening. All right, so today we are going to talk about how to start investing with just $1,000. Okay, we had a part one. I started it, I believe, on Monday. I went live on Monday. I started talking and talking and talking. Next thing I know, an hour and a half, almost an hour and a half passed, and I didn't have time to finish it. So this is part two of how to start investing with as little as $1,000. Now, obviously, you could start with way more than that. I would hope that you're starting with way more than that, but it's okay if you're only starting with 1,000. That's okay. We're here to talk about the different steps and the different types of investing that you can actually do. So, as true to fashion, I always start about 5 minutes after the designated time, and so we're gonna get started at 8:35. So, those of you who are taking notes, those of you who are, gonna sit here with me throughout the whole live, grab your drinks, grab your juice, your wine, your beer, whatever it is that you drink around this time, right? And we will get started at 8:35. Okay. All right. So if you're watching live, go ahead and type in live into the comments and tell me where are you watching from. All right. I see Katya is watching, Miss Lady Juicy. Okay. It looks like she tagged someone. That's right, everybody. Please invite all your friends, invite your family, your coworkers, people that you talk to about investing, invite them to the group because that's how we grow the group, right? All right. Miss Lady Juicy is watching live. Tom. Hello, Tom. How are you? Katya, of course. Katya's always on. Curleen. All right, Charlie. Where are you guys watching from? I'm here from Miramar. If you're watching on the replay, go ahead and type in replay and tell me where you're watching from. And if you're watching this on the replay, tell me what is your biggest takeaway from the live. Okay. All right. Any questions you guys have? Go ahead and type in your questions from the last live that I did. I know you guys had a lot of questions. You were typing, you were excited, and you wanted to learn more, right? So type in any questions from the last live that I didn't get to go over. And then as I wait for 8:35, that'll kind of give us some time, okay? Shayna is watching from Charlotte. Miss Lady from Miami, currently in Minnesota, visiting. Okay, cool. I've never been to Minnesota, so interesting. All right, Ronald is from Winter Haven, Florida. I'm in Miramar, Florida. I'm in South Florida, Southeast Florida. Okay. Who else? Erickson, live from Seattle. What are you doing, Erickson? I got guys. Can we stop and take a second and congratulate Erickson for becoming a cryptocurrency millionaire? We have a whole millionaire amongst you guys here. Okay, so definitely reach out to him. He is a beast at cryptocurrency. He became a millionaire in 9 months. So hey, I want to learn from Erickson, okay? So you guys definitely hit him up. He has a group. I'm part of it, the Discord group. You pay every month, and then he tells you what signals and what's out there, what to look for. He educates you and everything. Kind of the same thing that I do, okay? Now, why am I over here promoting somebody else? Because there's plenty for everybody to eat. So I want you guys to make money. If you got this guy over here who's making $1 million with crypto, he is the best person to learn from. So go to him, okay? And then come back to me about stocks. All right. So what time is it right now? It's 8:34. So we have a minute. While you guys are typing in your questions, Shayna says the 5 assets to own. I'm out and I don't have my notebook. Okay, yeah, that's exactly what we're gonna go over together today. So that's where I left off. So obviously that's what I'm gonna go over today. So you're good on that. You can watch the replay and take notes on the replay. All right. A couple of announcements, guys. I do have tomorrow afternoon at 6 p.m., 6:15, we are having a stock options webinar. We have another millionaire. I've just got a whole bunch of millionaires in this group, and I just want to get them all in front of you so you guys can learn from everybody, not just me, all right? I don't want you to just learn from me. I know some stuff. I know a lot of stuff. but I don't know everything, okay? And I want you guys to make money. So my way may not work for you. Maybe somebody else's way is easier, right? And maybe you need a combination of my way and somebody else's way to make you money. So anyways, don't want to get off on a tangent here. Tomorrow afternoon, Jeremy Newsom and I are gonna be teaching the stock options webinar. Okay, so a lot of you guys are interested in learning how to trade options, or you don't know what an option is. So just a brief recap before I get into it. Some of you guys are still hopping on here. Okay, before I get into it, right? A stock option is the right to buy a stock at a certain price. Okay. Now, why would I want the right to buy a stock at a certain price? Well, if the stock is trading at $200, wouldn't it be nice to have the right to buy it at $100? Oh, Jeremy. Yes, Jeremy's just texting me just now. Okay, awesome. So if the stock is trading at $200, okay, wouldn't you want the right to buy it at $100? Right? And so having the right to buy it at $100 as the stock goes up can make you a significant amount of money. Okay, so that's number one. Number two, when you have a stock option, when you have one stock option, it's equal to 100 shares of the stock. Okay, so if I want to buy Apple right now, Apple is trading at what? Let's take a look at Apple real quick. I'm going to look at my Thinkorswim. Okay, some of you guys are using Robinhood, whatever it is. Okay, so let's take a look at Apple. Okay, Apple, okay, is $131.94 currently. The market's closed, so this is the price, okay? So $131.94. If I want 100 shares of Apple at $131, how much money did I spend? Go ahead and write it in the comments, okay? If I want 100 shares of Apple, all right, and Apple is $131 per share, how much money do I need to spend? Okay, I'm going to wait for you guys. Let me go through the comments. Hi, Charlene. Erickson is Kevin Holmes pancake. Okay. I don't know what that means. Already. Any questions, any comments on here? Okay. All right. So if I want 100 shares of Apple, and Apple is $131 per share, how much money do I need to buy 100 shares of Apple? Okay. I'm going to wait for you guys. Some of you guys are still trickling in. Okay. Mirtha says 1,031. That's wrong. Okay. 100 shares times 131. 100 times 131. 13,000 exactly, Shayna. Right. So you're going to need $13,000 exactly, Michelle. Right. You're going to need $13,000 to control 100 shares of Apple. Now, if you buy a stock option on the Apple, right, one stock option allows you to control 100 shares. So if you buy one stock option, guess how much you're going to pay for that stock option? Go ahead and write in the comments. What do you think you would spend on a stock option that allows you to control 100 shares of Apple? What do you guys think? Do you think you're going to need $13,000? Okay. While you guys are typing here, how about $1,000? How about $500? How about $2,000? Right? Depending on the option, depending on the expiration. So literally the title of this live is how to invest with just $1,000. And that's something that we're going to get into. Stock options would be one of the best. Yes, exactly, Katya. Maybe it depends on the option, but you're not going to spend $13,000. Yes. Marie, you could spend about $250, right? You could even spend as little as $68 to control 100 shares of Apple. Now, obviously, Jeremy Newsom and I, Jesse says $100. Yes, you could spend $100, less than $1,000. Absolutely. That's right, Mirtha. You could spend less than $1,000. So Jeremy Newsom and I are going to teach you how to use these powerful tools to grow your portfolio much faster than if you were to buy traditional stocks, right? So if you bought 100 shares of Apple, traditionally, it would cost you $13,000. Now, there's a lot of you guys in the group that can spend $13,000 on one stock. That's great. But some of you guys are starting with $1,000, 2,000. Some of you are starting with 500. And so what are some of the options that you have? You can't buy 100 shares of Apple, but you can buy a stock option on Apple for $500, for 200, for 1,000, for 2,000. All right. So if you guys want to register for the course, let me make sure I have the link here. Okay, I'm going to get that started. Those of you who are watching on the replay, don't worry, we're going to get started. Just fast forward to like minute 10, whatever the minute is. I should have had, oh, I'm live. I can write on my own live. Hello, why haven't I done this before? Okay, option. All right, bear with me. Any questions you guys have, guys? While I look for this, any questions that you guys have from the last live that I did not go over? Any questions that you guys have from the last live that I did not go over? Okay, any questions? Bear with me here. I'm looking for my link. Okay, here we go. Copy. And I'm going to paste it on my live here. Any questions? I don't see questions. Any questions from my live? Ooh, I can hear myself. Any questions? I don't see questions. Oh, that's me talking. From my live. Ooh, I can hear myself. Any questions? I don't see questions. Perfect. All right, so I just wrote it. All right, so guys, go ahead and click on that link. Register for the stock options course. It's only $147. Trust me, stock option courses are about $1,000, $1,500. The cheapest that I saw was about $1,500. Some of them are $4,000, $5,000. Jeremy's going to be teaching for 2 hours. Okay, Jeremy's going to be teaching for 2 hours, and I'm going to be teaching for another 2 hours. So you get 4 hours of a millionaire and myself. Okay, soon to be millionaire. Okay, I'm almost there. I'm not far. Okay, so soon to be millionaire, teaching you for 4 hours, and you're only paying $147. Again, this live is not to sell you. It's just to show you that some of this stuff you can actually learn more about and actually implement it and start making some money. Okay, all right, cool. Charlene says, can you complete the asset classes? That is the very reason why I have a part 2. So yes, the answer is yes. All right. Okay, awesome. Shauna said, okay, yes, guys. So let's talk about this. All right, cool. So now let's move. Before I get into that, let's review. Okay. So the first part of how to invest with $1,000, you always start with your goal. Okay, step 1 is start with your goal. I remember when I was rewatching the replay from last time, and I was in the middle of teaching step 1, and I had someone in there continuously asking the same question, how do I start? Guys, we don't need to overcomplicate this. Okay, if I'm giving you the steps on how to invest and you think it's just too easy and you need to overcomplicate it, then you're looking to lose money. This stuff is not hard. If I tell you the first step is to go over your goals, please don't skip that step, because what's going to happen is you're not going to know what your goals are. You're not going to know where you're headed. You're not going to know what you want. And so guess who's going to control you? If you're not in control, who's going to control you? Okay? The market's going to control you. And when the market controls you, guess what? Do you think you're going to be profitable if the market's controlling you? If you don't know to turn left, to turn right, to buy this stock, sell this stock, maybe stay away from that stock because it doesn't pay dividends, or maybe this stock, the growth rate is too low, or maybe this stock is overvalued or undervalued. If you don't know where you're headed, none of the other stuff that I teach you matters. Because you don't know. You're going to be pulled in all different directions. People are going to tell you about Bitcoin. They're going to tell you about Dogecoin. They're going to tell you about AMC. They're going to tell you about GameStop. They're going to tell you about the next hottest penny stock. And because you don't know where you're going, you're going to be pulled in all different types of directions. And all different types of directions are going to bleed your portfolio. So again, I spent a whole hour and 10 minutes talking about your goals and why it's important. And I had someone literally ignore everything that I was saying, kept asking the same thing. That was so annoying. I really wanted to cuss her out. Like, really, you see me explaining exactly what to do and you're asking me, what do we do? You start with your goals. I know that's boring, guys. I know it's boring. I know you don't want to talk about your goals. You don't want to put a number out. You just want to get started. What stock do I buy? You're here because you want me to tell you exactly what stock to go buy so you could go make money. That's not what this live is about. It's about knowing where you want to go. Once you define that, then you take the steps to get to where you want to go. Not where I want to go, not where Gigi wants to go, not where Marie wants to go, not where Erickson wants to go, but where you want to go. Okay? Second step, you want to make sure what tax advantages do you want to take advantage of? Do you want to pay taxes now? Do you want to pay them later? Or maybe you want a combination of the two of them. Okay, for your children, there's a 529 plan that's a tax advantage. You could do a child Roth IRA. You can even do a life insurance program where there's no taxes at all, right? Or you could do a custodial account for your child where you pay 15 to 20% capital gains tax. Okay, the third step, you want to decide how much time do you actually have. How much time do you have until your goal, and how much time do you have to dedicate to the goal? Right? And that's going to determine whether you become an active investor or a passive investor. If you have all the time in the world and you're at home, you work from home, and you're in front of a computer all day and you have nothing to do, then you can be an active trader. You can put in the time to study the charts. You can put in the time to study the company or the crypto or whatever, or the foreign exchange pair, whatever it is that you're trading. You have time to study it, to look at its past data so you understand how it behaves. So now you know what price to get in, what price to get out, because you understand the company and you understand the data. But if you don't have time for all of that, then me telling you to go out there and trade and to buy low, sell high, and to read the charts and make sure that it's touching the 100-day moving average and the 200-day moving average, support and resistance, look at the weekly chart, the monthly chart, and the daily chart. If you don't have time for all of that, then why does it matter for me to tell you to do that? Right? And so you want to determine, how much time do I have? Now, Kat, I don't have the time to do all of that. Okay? So maybe passive investing would be good for you. What does passive investing looking like? What does passive investing look like? Okay, so passive investing is something like setting up an automatic payment. Okay, so for example, if you're going to invest into cryptocurrency, okay, choose your cryptocurrency, whether it's XRP, whether it's Ethereum, whether it's Dogecoin, although I'm not a big fan of it because I don't see longevity with Dogecoin, but that's me, that's not you. That's my goals are different from yours. My views, my perspective, my style of investing is different from yours. Yes, you learn from me, all right? And then you can test out some of the things that I teach. If it works for you, you can adopt it, but you don't have to do everything I say, right? And so, yes, if you, let's say you pick a cryptocurrency or even a stock and you set up an automatic payment. Those of you who have Coinbase, you can set up an automatic payment, an automatic withdrawal where you buy Bitcoin or whatever coin that you decide on, Ethereum, Litecoin, Mana, CRV, what's the other one I have? LRC, XRP, any of them, right? There's a new coin out there that Erickson was talking about. Hit up Erickson, right? Another meme coin that's supposed to be the next big thing after Dogecoin, right? So whatever it is, set it up. Where every single month you buy $100 worth of it, $200 worth of it, $50 worth of it, $25 worth of it. And you stack up. Next thing you know, after a year, you've got $1,000, $2,000, $3,000 worth of a coin. And next thing you know, that thing is worth 10, 20, 30, 40, 50 grand. Okay, last year I bought XRP. I bought about $2,000 worth of XRP at 16 cents. And right now that's worth about what, 20 grand almost? Right? I'm just sitting on it. Okay? So these are some of the stuff. And last year I just bought it. I just dumped 2,000. But imagine if I was putting $100 a month every single month into that. I would have way more than 2,000, way more than 20,000. So automate your, somebody was talking about a SEP. Okay, I gotta scroll up and see and catch up on that conversation. Okay, so automate your investing if you're gonna do that. Well, Kat, how can I do that with stocks? Same thing. Call your brokerage account. What are the brokerage accounts that I talked about? TD Ameritrade, Charles Schwab, Vanguard, Fidelity. Okay, and I'll add Merrill Lynch to that. One of my clients today has Merrill Lynch. I forgot about Merrill Lynch. It's a very good brokerage with, I believe, with Bank of America, right? Yeah. Okay, so call them and say, hey, I'd like to buy Apple every single month. How do I set that up? Don't come into my inbox, because if you're not in a consultation with me, I do not do free consultations over DM. That's not fair to my students who pay, right? And it's not fair to me either. I don't have time to sit here and give everybody different advice, because everybody's different. I don't have time to sit here and write a whole paragraph on what you should do and what you shouldn't do. Okay? If you need help with the simple stuff like that, call your brokerage. Hey, I'd like to set up my automatic payment to be able to buy VOO every month, to be able to buy Disney shares every month for my child or for myself, or buy an ETF or a mutual fund every month. Any questions on that, guys? Any questions? Okay. All right. So the next thing you want to do is you want to understand, well, I talked about compound interest as well, right? So if you're investing every single month, now you're buying and holding, which we're going to talk about, the different styles of investing. We're going to talk about that today, and you'll take advantage of compound interest. Okay. The fourth thing not the fourth, the fifth. That was fifth. 1, 2, 3, 4, 5. Okay. The fifth thing. Okay. This is where I left off. Actually, before I get into that, let me read the questions and then we'll get into that. Let me read the questions. Okay. Okay. What time is the live? What time is the live? Katya, what do you mean, what time is the live? Are you talking about the options webinar? The options webinar is at 6:15. Let me post it again here, okay? The options webinar is at 6:15. 6:15, and Jeremy is teaching for 2 hours. Let me read the question. Okay. I just sent it again. So Jeremy's going to be teaching for 2 hours, and I teach for another 2 hours. So you get 4 hours. Most option courses are about 1,000, sometimes 4,000, sometimes 5,000. I strategically priced it very low so you guys have access to that information. Okay. Already, yes, bucket of stock, yes, ETFs, also SEP for those with corporations, yes, also a SEP IRA. So you're talking about the different retirement accounts, yes, a SEP IRA or a simple IRA. You can also do a solo Roth. You could do a solo 401k as well. So if you're a sole proprietor, you own a business, whether that's an LLC, S Corp, C Corp, you can also open a retirement account for you as the owner, and you can open a retirement account for your employees if you have them. If you're a sole proprietor, you can open a solo 401k, a simple IRA, and a SEP IRA. Okay, if you have an LLC, you could do a simple or a SEP IRA. These also have tax benefits as well. If you want to learn more, go ahead and click on the link, the Calendly link, which I'm gonna type right here. Okay, you're gonna click on that link, and then you guys can schedule a one-on-one with me. Okay. Any other questions before I move on to the juicy stuff? I know that's why you guys are watching, because you want to know. Here's my Calendly link. So 15 minutes. Okay, let's move on. Alrighty, so that's it. This is awesome. One question: are you a fiduciary, Peggy? Hey, Peggy, absolutely, I am, and that's why I cannot give investment advice. I cannot give you guys stock advice. So whenever I come on these lives, I hope you're not coming here to have me tell you what stock to buy. I'm here to teach you how to fish, because Katiana will not be around all the time to give you stock advice, right? Whatever stock club member that you're in, that person is not going to be around for 20, 30 years to tell you what stock to buy. You're either going to have to keep finding a new stock club to enroll in, or find somebody else to follow, right? And so I'd rather teach you how to fish so that you know how to do this on your own. Okay? All right. Awesome. All right. Perfect. So there are 5 types of asset classes. 5 types of asset classes. The first one is called equity, which I went over last live, but we're going to go over it again today. So equity is the same thing as a stock. Okay, I had some people in the comments last time, they were trying to figure out what's the difference between a stock and a share. A stock and a share is the same thing. You buy one stock is equal to ownership in the company. You buy a stock in the company is equal to ownership. A share in the company is equal to ownership. You have one share, that means you own one stock. That's all it is. You have 2 shares, you own 2 stocks. Shares and stocks are the same thing. Please do not confuse that. This stuff is easy, guys. The hardest part with my students, the ones that I work with, are that they try to overcomplicate very simple things. We think that this stuff has to be hard. There's no way this is so easy. There's no way I'm making money already and I haven't done any work. There's no way I just literally followed what Jeremy said and now I'm making $1,000 extra in a month. There's no way I'm following exactly what Katiana said and I made the entire money that I spent on the course, I made it back. There's no way that I literally followed everything Katiana said and I made $500 in less than 2 weeks. There's no way. Guys, let's not overcomplicate this. This is not hard. All you have to do is think with your brain, with your logic. Because what happens is you guys, you think with your logic, and when it's time to actually do it, you let your emotions take over. And now you overcomplicate things that are simple. Okay? So equity. Equity is ownership. You own a piece of the company. Simple. Okay? There's two ways to make profits with equity. With a stock, with a share. Okay, 2 ways. Number one is if you buy the stock and it appreciates in value, you've made money. Cat, I can also short a stock. Yes, you can short a stock, absolutely, but that's for traders. That's not for investors. As an investor, you're not shorting anything. If you want to learn how to short a stock, book a consultation with me and I will talk to you about trading. Okay, this is investing. What's the difference between investing and trading? We covered it in the other live. Investing is long term. I'm married to the company. I'm keeping up with the company for 5, 10, 20, 30 years. Investing is a hit it and quit it. I'm not invested. I don't want to know how her day was, how his day was. I don't care about his family and his future and his visions. I just want to hit it and quit it. That is trading. Hit it and quit it. That's it. In and out. We are not discussing trading right now. We're discussing investing. We're discussing marriage. Okay? So buy and then the value goes up. Second way is through dividends. Okay, so if the company has extra profits, there are some things that it could do with it. It could reinvest it into the company, or it could pay its investors and say, hey, investors, thank you so much for believing in my company. Here's a little 20 cents for you per share. Okay, now let's not sleep on dividends now. I know 20 cents doesn't sound sexy. I know $1 doesn't sound sexy. I know 40 cents doesn't sound sexy. But what does sound sexy is the fact that when I have a big account, when I'm sitting on a couple of million, because all of us are here to become millionaires, to build wealth. We're not here to manage $1,000 account for 20 years. We're not here to manage a $20,000 account either. We're here to manage a multiple 6, 7, 8 figure account. Yes or no? Type in a 1 if you're here to manage a multiple 7, 8 figure. Forget the 6 figure. Okay, that shouldn't even be a goal anymore. 6 figures should be minimum. Okay. Type in a 1 if your goal is to manage a multiple 7 to 8 figure portfolio. Type in a 1. If your goal is to manage a multiple 7 to 8 figure, Charlene says 1, right? And so in order to manage a multiple 7 to 8 figure portfolio, you have to get ready. You have to lay that foundation. It's not, hey, I'll figure it out when I get to $1 million. No, you'll figure it out when you get to $1 million and negative $1 million, maybe. You'll figure it out then. Okay, there's no way you're going to reach $1 million without a solid foundation. Yes or no? Okay, so that's why you always start with your goal. Okay, so why did I go on that whole tangent, right? So when you have a multiple 7, 8 figure portfolio, imagine investing in a stock like Coca-Cola, like Pepsi, right? Like Colgate, like Walmart, like Target, who's giving you dividends every single quarter, no matter if the stock goes up, down, or stays sideways. That's powerful. If I own 2,000 shares of Coca-Cola, or 2,000 shares of McDonald's, or 2,000 shares of a REIT, 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 a real estate investment trust, and the REIT is paying me, I don't know, $2 per share every year. If I own 2,000 shares of that, that's an extra $2,000 that I'm making no matter what. whether the REIT goes up, down, or stays sideways. That's very powerful. And with dividend investing, you can actually buy the stock or whatever it is, the ETF. There's three ways to collect dividends: ETFs, stocks, and I said ETFs and mutual funds, stocks, and REITs. ETFs and mutual funds, stocks, and REITs. Those are the ways to collect dividends. Okay, so if I own 1,000 shares of this, no matter what happens to the stock, I'm making $2,000 that quarter or that year, whatever it is. Is that not powerful? Maybe you guys don't want that money. Maybe you're like, cat, I don't know about that $2,000. Okay, well, I'll take it. Okay. All right. So 2 ways to make money with the stock: value goes up and dividends. Okay. There's 2 ways to invest in the stocks. Actually, 3 ways. Okay. 3 ways to invest in stocks. You can buy an individual stock. Okay, so that you can buy a stock like Disney, you can buy a stock like Apple, you can buy a stock like Microsoft, you can buy a stock like Tesla. I'm dropping gems, guys. You guys are crying about my prices. Okay, do you have a discount? I give you nothing but free information up in here. Okay, are you paying attention is the question. Okay, I just listed a whole bunch of stocks. I hope you're paying attention. Alrighty. Next, Square. If you buy, you can buy Square. You can buy PayPal, right? You can buy these stocks here individually, or you can buy a fund. With the fund, you have an ETF or a mutual fund. That is a basket of stocks. So let's say you wanted to invest in Berkshire Hathaway, Square, PayPal, Apple, Microsoft, Disney. You wanted to invest in all of these. You can buy them individually, or you can have a basket that's got all of them in there already. Okay? So some of these funds, don't sleep on them. Some of these funds like ARKK, ARKF, right? All the ARK funds, they did 152% last year return, 152% return last year. So whatever money you put in there, you would have doubled, you would have done 1.5 times it. So let's say you put 10 grand in there, you would have had 10 grand would have been, you would have made 15 grand, your account would have been 25K. Okay, some funds out there from Vanguard. Vanguard has really low cost ETFs and really low cost mutual funds as well. Some of them, VGT did like 60% return. VOOG, right? What's another one? VTI I was looking at was doing good. One of my students, we were looking at VTI today. So take a look at those, okay? Any questions before I move on? Any questions on equity? Okay, I said there were, so you can invest in an individual stock, you can invest in a mutual fund or an ETF. Okay, you can also invest in REITs, which are like stocks, okay? What is the difference between ETFs and mutual funds? If you guys want to know that, go ahead and enroll in the complete beginner's course to stock market investing. Any questions before I move on? All right, that's right, Natalfa. That's why. Thank you. Discount for what? Your prices are very affordable compared to what everyone else is charging. Support your people. It will be worth it. And she's dropping free gems. Yes, thank you. Thank you for that. Yes. No, I'm not worried. And there's always going to be people who can't afford your services. That's part of the business. I'm not worried about it. It's just that I want to help you guys, but I can't help you for free. It's not fair to me and my experience and everything that I went through to actually get this knowledge. And it's not fair to you either, because there's nothing holding you accountable. So I can't help you for free. I would love to help you, but I can't. Okay? Alrighty. So, all right. Any questions on equity? Okay? So let's review while you guys are typing your questions. Number 1, two ways to make money with the stock, with equity, with a share. Okay? They're all the same thing with ownership, right? Is the value goes up or you pay dividend or you receive dividends. Okay, you can invest in individual stocks or you can get a basket of stocks. Another thing I wanted to mention with the basket of stocks, you can also get with an ETF, you can get a basket of bonds. You can also get a basket of cryptocurrency. You can get a basket of precious metals. You can get a basket of all types of currencies, right? You can get a basket of real estate. investments, where you can get a basket of real estate stocks. You can get a basket of all tech stocks. You can get a basket of all hospitality stocks. You can get a basket of the top 500 companies in the US. You can get a basket of the top 30 industrial companies. You can get a basket of top 100 tech companies. All right. So research ETFs and mutual funds. If you want to learn more, book a consultation with me and I will be glad to teach you some more. Any questions, guys? Any questions? Okay. Here's my link for the Calendly, my Calendly link. Go ahead and book a consultation. Okay, moving on. Second asset class is called debt. Okay, second asset class is debt. In debt, you are the lender. You, the investor, become the lender. You are lending money to someone. That could be the government. So you guys have heard of a government bond. Okay. It could be a corporation like Home Depot, Walmart, Apple, Tesla, right? You can lend them money as well. Okay. Or it could be a municipality, which are municipal bonds. Okay. Municipal bonds are cities, municipalities. So maybe the city of Miramar, the city of Fort Lauderdale. Somebody said they're in New Haven, Florida, right? Somebody's in Seattle, Washington, right? The city of Seattle, right? You're lending them money. What are some examples of why the government or why a corporation would need to borrow money? What would they need to borrow money for? What are some examples? Go ahead and type into the questions, and I'm gonna scroll up and look at any comments so far. Riley Rack says, what crypto to invest in? You must have just came on the live because I just talked about how I do not give investment advice. So yeah. Okay. Can you rename the stocks you mentioned? Absolutely not, Aaliyah. Go ahead and watch the replay and take notes. Okay. All right. Bunch of ones. Okay. Alrighty. So let's see. Travis says firearms. Okay. Yes. For the army, right? Okay, so if for the military, if pay for projects, right? So if the government needs money to pay for projects like a bridge, right? Like opening a school, a park, right? Infrastructural investment, absolutely. Rebuilding a highway, right? Fixing the roads, right? These are all things that the government may need to borrow money from. And so they issue a bond, right? And they say, hey, Keith, yes, municipalities are, no, interest free. I thought you said tax free. What do you mean by interest free, Keith? Did you mean tax free? What do you mean by interest free? Okay, Claudine says infrastructure, right? So the government could say, hey, Claudine, all right, I want to fix I-95 because I-95 is a mess and, it needs fixing. So if you, Claudine, you lend me $20,000, I'm going to pay you back in 10 years. And while I'm paying you back in 10 years, I'm going to give you 5% interest every single year. Okay, so you're going to get 5%. You're going to collect 5%, 5%, 5%. And then at the end of the 10 years, which is called the maturity date, you're going to get all of your money back. All right, so that is a bond. Now, Keith said interest free. I don't know what that means, but I'm glad he said that because municipal bonds, okay, the ones from your city, okay, are tax free. There are 3 things that are tax free in the finance world. 3 things. Anything with Roth in front of it, okay? Roth 401k, Roth IRA, Roth 403b, right? Those are all tax-free, meaning the taxes have already been paid on it. So whatever gains that you make, whatever profits that you make, you do not have to worry about taxes ever again, okay? Second thing that's tax-free is life insurance, okay? Whether you buy life insurance, you pass away and your family inherits that money is tax-free. Or if you have a permanent insurance and you have a cash value in there, you have access to that cash value, also tax-free, okay? Life insurance is a very powerful tool for generational wealth building and also for tax strategies. Don't sleep on life insurance, guys. Okay, I'm not here to sell you life insurance. I'm here to just teach you the power of it. The third thing is municipal bonds. So you lend the government $1 million, and let's say they're giving you 5%. 5% of $1 million is $50,000. So every year, $50,000 every single year. You're getting $50,000 every year, tax free. This is very powerful stuff, especially when you're sitting on a multiple 7 to 8 figure account. Okay? Remember, that's why you all typed in one, was because you're here to manage a multiple 7 to 8 figure account, correct? Okay, so you want to learn about all your options from now so that when you reach those millions, you know exactly what to do with it. You're not scrambling. You're not pulled in 500 million different directions. Make sense? That's the point of this live. All right. I know it's to start with 1,000, but these are some of the things you can look into. Okay. So bonds are generally considered much safer in the investment world because it is more. Now there's no guarantees in investing, but it is essentially way more reliable than stocks, right? Even your big boys like Apple, even your big boys like Microsoft, even your big boys like Disney, right? They usually suffer some sort of losses at some point in time. Okay, so yes, buying stocks in the long run will make you money, buying real estate and everything. But usually bonds, hey, if the government is paying you 5% every single year for 10 years, the odds of the government defaulting on that loan are very, very, very small. Okay, so bonds tend to be good for maintaining wealth. Okay. I know this live is about investing with just $1,000, but eventually you're going to take that 1,000 and you're going to grow it to multiple 7 and 8 figures, right? So we need to know how to protect that. So one of the good ways to protect that is through bonds. Okay. All right. So it's a way to have your money still make some money for you and not have to worry about losing it. Okay. So yes, if you have a multiple six figure account and you lend somebody 2 million, 3 million, now you can count on that interest every single year. And you know it's not going anywhere. But it's not sitting in the bank collecting dust either. Okay? All right. Any questions on that? Any questions on equity or debt? The next asset class, okay? Oh, by the way, I wrote in my notes before I move on. Go ahead and type in your questions, guys. The next asset class is a the same asset class, the debt. Another way to invest in bonds, instead of buying the bond and tying up your money for 10, 20 years or 5 years or whatever the case is, you can buy a bond ETF. Okay, remember what an ETF is, right? It's a basket of stocks. Remember, I also told you it could be a basket of bonds. So now you don't have to worry about should I lend money to the US government or to the Canadian government? Should I lend money to Britain or the Netherlands, right? You could get a basket that's got bonds for everybody. Maybe with the municipal bonds, you're like, should I lend the money to Miami or should I lend the money to New York? Should I lend the money to Seattle or should I lend it to Charlotte, right? You can get a whole basket of municipal bonds, right? Same thing, okay? Same thing with corporate bonds. Should I lend the money to Home Depot or should I lend the money to Tesla? Should I lend the money to Apple or should I lend it to Microsoft? How about you get a whole basket and you lend money to everybody and you get all of the gains, and guess what? An ETF you can buy and sell at any time. So you're not tied up for 10, 20 years. Okay. So you get the same type of safe, conservative growth of a bond without necessarily having to tie up your money. Okay. Any questions? All right. You guys are tagging people. Okay. I don't see questions. Already safer than stocks. Okay, so what do you look for in a bond? Okay, so if you're looking at a government bond, okay, you want to look at the credit worthiness of the country. Okay, would you rather lend money to Venezuela or would you rather lend money to the US? Now, I'm not trying to be political or anything, I'm just spitting out facts over here. Would you rather lend money to Haiti or would you rather lend money to Canada? Okay, I would love to lend money to Haiti, but the reality is the possibility of Haiti defaulting on a loan is much higher than Canada. And so yes, Haiti's bonds may have a higher interest rate to compensate for that higher risk. So me as an investor, I want to make that decision. Am I willing to take that risk of lending money to Haiti or another country who's not as economically as stable as Canada? And am I willing to take that risk and get that high interest rate as a return? Or do I feel better just lending it to Canada? Right? So these are some of the things you want to think about. Now, what about a corporation? So with a corporation, you have a rating system. The Standard & Poor's, the Moody's, right? These are all rating agencies, just like with your credit. You have Equifax, TransUnion, and what's the other one? Equifax, TransUnion, and Experian. Okay, so they're all credit rating agencies that rate you okay, as your credit worthiness. They also have one for corporations as well. Okay, so a triple A is what you're looking for. A double A is the next best thing, and an A is the third best thing, right? So you want companies that have a track record of paying their bonds, paying their debts, so that you know if I lend money to you, Apple, if I lend money to you, Home Depot, right, then I'm gonna get paid. I'm gonna get my 5%, my 6%, whatever it is that they're paying. Okay. Any questions on bonds, guys? I don't see questions. All I see is people tagging people. So bear with me. I'll watch this later because sometimes I see questions that I don't see on here. Okay. The third type of asset class is called a cash or cash equivalent. Okay. Cash or cash equivalent. Those of you taking notes, we have a cash or cash equivalent. Okay. So what are some examples? Your checking account. Okay. Your savings account. A money market account is also a cash equivalent. Your CD accounts, treasury bills are also considered cash. So what is so great about cash equivalents? Well, the interest rate is not all that great, but the liquidity is what you're looking for. All right? You don't necessarily always want your money tied up into something. If you buy real estate, how liquid is that? If I buy a building today, can I go swipe my card and buy some fries with the worth of that building? No. Okay? I have to sell the building or at least collect rent from one of the units to be able to liquidate some of that, the value of the building, right? And so my money's tied up. All right? What else? If I buy a stock, if I buy Apple today, can I count on that money being in my account tomorrow? Right? Can I count on that money being in my account? Let's ask the audience, actually. Let's ask you guys. If I buy Apple today at $131 a share, let's say I drop 10, let's say I bought 100 shares. I dropped 10K into Apple. Can I count on my 10K being there tomorrow, available for me tomorrow? Can I count on that? I'm going to wait for you guys, okay? Aaliyah says no, so that was the first question, right? Claudine says availability. Yes, exactly. So if I buy Apple, no, I cannot count on that. What if Apple drops to 130 or drops to 138? Now my 10K is not 10K anymore. Same thing with Bitcoin. If I drop 10K into Bitcoin right here, right now, can I count on that 10K being available tomorrow? No. What if the Bitcoin drops 50%? Then I'll have 5K. Okay, so there is no liquidity in the stock market either. A lot of people think, oh yeah, well, I could just sell my shares and then do a transfer. The fact that you have to do a transfer already shows me it's not liquid. If I have an emergency right here, right now, can I go to the stock market and have the stock market take care of my emergency? No, I need to hope that the money's still there. I need to hope that there's a surplus, and I need to do a transfer. That takes 2 to 3 business days. Okay? So that is not liquid. So what is the point of having cash equivalents in your portfolio? Why do you think it's important to have cash in your portfolio? Let's talk about that. Why do you think it's okay? Wes says nope. Wesleyan says nope. It's a risk. Lakeisha says it's a risk. Exactly, right? So why do you think it's important to have cash equivalent? Why even go over cash equivalents? Why is that even something I'm talking about? Well, Kat, you're talking, this is live is about how to invest with $1,000. Why are you talking to me about cash? Cash is not investing. Okay? So why do you think cash is important? Why do you think cash is important? Let me scroll through the comments here. Okay. How long have I been talking? I don't want this to be too long. Oh, okay. Oh, I started at 8:30? Oh my gosh. It's always almost an hour. To have money on hand. Yes, Lakeisha. Absolutely. Okay, you want to have money on hand to take in case of a dip. Exactly, Claudine, right? You want to have the cash. Yes, you guys are talking about for emergencies. Absolutely. There you go. Ready money. Yes, Charlene. Absolutely. You want to be ready. You want to be ready if an opportunity drops onto your desk. Hey, Kat, I got some land in Mombasa, Kenya that's facing the beach. It's worth 100K. Let's go get it. I need to have the money to be able to go hop on that opportunity. I can't say, oh man, all my money's tied up, man. I gotta wait till Bitcoins goes back up before I have that money. Next thing you know, the opportunity passes you by. It's okay, opportunities come and go, right? But you want to have the cash so that if Bitcoin drops to 48K, hint, if Bitcoin drops to 36K, hint, I could grab a whole lot of Bitcoin and ride that baby right back up. Or if Apple drops to 120 or 115, hint, right? I can grab more shares of Apple. Or if Tesla goes down to 450 or 500, hint, right? I can grab some more at Tesla. Or if Microsoft drops to 198 or 200, hint, I can grab more Microsoft. Okay? All right, so what are the cash equivalents? So you have, again, checking account, right? Checking account, your money's collecting dust. It's not really making any money. Then you have a money market account. So a money market account gives you the liquidity of a checking account, okay? But it doesn't tie up your money like a savings account. So you get a return on your money. It's not a lot. Don't go out there putting all your money in a money market account and say, yeah, I'm investing. But if you have less than $1,000, let's say you have $1,000 in your savings, that's collecting dust or collecting 0.0005% or half of a percent, right? You could put it in a money market account that's giving you 1%, 2% return, and it has that liquidity so that you can swipe, and take advantage of opportunities or emergencies all you want while your money is still earning some sort of money. Okay? Can you do that in a CD account? Yes. Our grandparents back in the 80s, CD accounts used to give 13, 15% return. Now they're giving, if you're lucky, about 2%. If you're lucky. Am I a fan of tying up your money for a year or 2 years? Not really. But some of you guys need that discipline. Okay, so yes, you can take advantage of a CD. I would rather a money market or even a treasury bill at some point. Okay, because then the treasury bill is going to give you a higher interest rate and it's a lot safer too. Okay, and less fees than the CD. All right. Okay, so for example, if you guys are analyzing the companies, which I'm going to get into, okay? So when you're analyzing the companies, one of the things you want to look for is the cash flow. Where do you think Apple is well known to have a lot of cash? Where do you think it has that cash? Do you think it's just sitting in a checking account collecting dust? Absolutely not. So big companies use these cash equivalents as well. So you and your business, when you have your business, instead of having your money sitting in a checking account that's not doing anything, you could put your sales, right, the money that you're collecting from your sales, you could put that in a money market account. So let's say that, you're using Square. I use PayPal. I use Square. What else? I use all sorts of credit card stuff, right? And they usually take about 2 to 3% from each transaction. So when you guys pay me my prices that you cry about, a lot of you guys cry about, I have to pay a fee on that. Okay, so if I take that money and I put it into a money market account that's giving me back that same fee, now I'm breaking even. Now, yes, 2% doesn't seem a lot, but when you're managing a multiple 6-figure, multiple 7-figure business, 2% is a lot of money. Make sense? So if I'm getting that from my money market account, that gives me that liquidity or that treasury bill of some sort, or that high yield savings accounts, or even the cash value in a life insurance. Okay, there are life insurance programs out there, whole lives, permanent IULs, VULs, all sorts of stuff, right? That give you, some of these life insurances out there are giving you 7% return, and you have the same liquidity as your checking account. Guys, don't sleep on cash equivalents now. Right? When we're managing a multiple 7, a multiple 8-figure portfolio, yes, I know this live is about starting with 1,000, but we're not going to stay at 1,000. Okay? I want you guys to understand that we're not here to stay at 1,000. I'm not going to tell you what stocks to buy to double your 1,000. I'm not interested in you doubling your 1,000. I'm interested in you growing that 1,000 to 7, 8 figures. That's what I'm interested in. So I'm teaching you stuff that you're going to do when you get to 7, 8 figures, because now you have the confidence that you know how to handle 7, 8 figures, and now you can welcome 7 to 8 figures. The reason why you guys are not reaching 7 to 8 figures is because you're scared of it. You don't believe that you'll know what to do with it. And so you're subconsciously rejecting it. But if you know what to do with the money, you understand that you have a solid foundation, your subconscious welcomes it. Are you guys picking up what I'm putting down? Type in a 1 if you're picking up what I'm putting down. I always get very spiritual in my lives here because building wealth is spiritual. There's no way around it. I'm sorry. I try to keep it G. I try to keep it, general, but we have to get down to the science of success here. Okay, we have to understand that we need to be ready for these 6, 7, 8-figure accounts. We need to know what to do with them. If not, you're going to stay in the $1,000 range. You're going to stay with the little 10,000. Yes, I said a little 10,000. $10,000 is not money. $20,000 is not money, guys. It's great. I'm glad that you guys have that, but that's not money. Some of you guys are on the phone with me. You're like, yeah, I've got 20K, like you're a big shot. Okay, I'm going to be the one to break it to you. That's not money. I'm not impressed by that. And you shouldn't be too. You should continue to grow. Continue. I'm not disrespecting your journey. Okay, some of you guys work hard to get to your 20,000. You work hard to get to your 50,000. And I'm not here to disrespect it. But don't get too comfortable is what I'm saying. Because that money can be gone in a second. You make the wrong move, you go out there and you chase the wrong stock because you don't know where you're going, and that 50 grand is gone. Trust me, I've been there. I'm able to say that because I've been in your shoes. Okay? So all of that to say is, yes, oh, Kat, they're only giving me 2%, 1%. Why does that matter? Well, when you have $1 million, 2% is a big deal. Okay? All right. All right. Moving on. So, I have life insurance. Yes, girl, talk that talk, right? Exactly. So I have life insurance here as a cash equivalent because it can be used as a cash equivalent. Okay. So how does that work? So with life insurance, you have your life insurance part, and then you have the cash value part. So the cash value is growing either through indexing, okay, or it's going through dividends. All right. So those of you who are interested in that, I have Tony Martinez, who's part of the group. Actually, maybe I should tag him. I'm just going to write his name. Oh, I could tag him, right? Let's see. Can I tag Tony? Add Tony. Tony Martinez. He is Tony Martinez. Okay. He does life insurance and all of that. I work with him. I also work with Sharika, who also works with the firm that helps you get into an IPO before it hits the market. She also can help you with that as well. Okay. So I'm not here to sell you life insurance. I'm not interested. That was another life. I'm not interested, but I'm very, very, very adamant about using it correctly. Okay. The fourth type. So I went over 3. Equity, we went over debt, and we went over cash equivalent. The fourth type is real estate. Ta-da! Real estate. All right. So real estate can be residential. It could be industrial. It could be office buildings. It could be commercial buildings, shopping plazas, hospitals, land, farmland, timberland, all types of things. Okay. So same thing with the stock, right? There's 2 ways to make money with real estate. When you buy a property or you buy an asset of some sort, real estate, something, and the value goes up, or you can get rental income. A lot of you guys here have duplexes, quadruplex, how do you even say quadruplex? I don't know. Triplexes, buildings, right? You have land that you're buying and holding, right? These are all. You can also rent out. For example, if you have a piece of land that's next to a stadium of some sort or next to like a big event, you can also you can get a permit to have it become a parking lot, and now you charge for parking. So now you're collecting. You're not liquidating, but you're, what's the word I'm looking for? You're making money off of your land without having to sell it. That's the word. Whatever word says that is the word I was looking for. Okay? Monetize. There you go. Monetize them. You're monetizing your land. So you could do that too. You can rent the land. So, a little note that I learn from an investor is it's good to buy land at intersections. If you look at all fast food restaurants, McDonald's, Starbucks, Burger King, right, Chick-fil-A, these big boys, usually they're at an intersection. So if you're buying land from an up and coming neighborhood or an up and coming town, right, and the land is available, you want to look for an intersection so that you can one day rent out to Starbucks, or one day rent out to McDonald's, or sell to McDonald's, or something like that. Little hint for you. Now, I'm not the real estate person. We are going to have a real estate person, Omi. Okay, Omi is going to come on our live next week, Wednesday, and he's going to talk about how to get started in real estate. Okay, so now with $1,000, I'm going to bring it all together, guys. There's a method to my madness, right? Now, Kat, there's no way I can buy a piece of land for less than $1,000. You said this live was about starting with $1,000. Actually, you can. Okay, there are ways to buy land for less than $1,000. Okay, but I'll let Omi take advantage of that subject and tell you guys. But you can invest in real estate without necessarily buying property. What are some ways you can do that? Something called a REIT. Okay, I mentioned it when I talked about dividends, and I'm going to bring it up again. Okay, it's a real estate investment trust. Okay, a REIT is a real estate investment trust. So, what is a real estate investment trust? It's a group of investors that get together, right? They put their money in a pool and they use that money to buy and sell real estate. So they could buy residential real estate, industrials, warehouses, hospitals, hotels, shopping plazas, buildings, right? All types of stuff. And so when they profit from these that they buy, they can buy more real estate or they can distribute the profits amongst everybody who's participating in the trust, in the fund. That is paid in the form of dividends. This is why I talked about dividends, right? The three ways to collect dividends: ETFs, stocks, and REITs. Okay, so REITs are required to pay you dividends. So, for example, I can think of a REIT on the top of my head, BPYU. Okay, BPYU pays about $1.33 per share every year. Okay. So if I want to collect, let's say I buy a building for, let's say I buy a condo, a 2-bedroom condo for $300,000. Okay. And let's say I put down $60,000. Okay. Because this is an investment property of some sort. It's my second home. I put down $60,000. That's the 20% down. And then I put another 20K to fix up the place so that I can rent it out. That's about 80K that I've invested. Okay, so with that 80K, I still have a mortgage. So let's say I rent out that building. I'm sorry, that condo, that 2-bedroom condo. Let's say I rent it out for $2,000 a month. Okay, what is my mortgage? Let's say my mortgage is 1,000, maybe 1,500. I don't know, depending on your credit, depending on where you are, depending on a lot of different things. But let's just say my mortgage is 1,000. So if I'm charging $2,000 per rent for rent, I'm collecting $2,000. That means I'm pocketing about $1,000, right? Because my mortgage is 1,000, so I got to pay my mortgage, and then I have 1,000 left over. From that 1,000 left over, let's say I need to put a reserve of some sort to be able to take care of a fridge if the fridge goes out, or the AC if it's broken, or if somebody puts a hole in the wall, or if my pipes freeze up. Right? All types of things that can happen. You want to have a savings for your real estate. So let's say after all expenses are paid, after, you collect 2,000, let's say you keep about $700 worth of that. Okay? So $700 times 12. Okay, 700 times 12 is about 8,400. So with your rental property, with your two bedroom that you're renting out to someone, you're pocketing about $8,000 a year from that. That's if it's occupied for the whole year, right? Because we're not accounting for vacant times. We're not accounting for people not paying their rent because it's COVID and, and people are not working. We're not accounting for that. If everything goes smoothly, I'm pocketing about $8,000 from that condo. And it cost me about 80 grand to put down. And then I still have to pay the mortgage because I still have a mortgage on it, right? Okay, so by the time that I'm done, I would have spent probably upwards of $400,000. Okay, to make $8,000 a year. All right, so I can do that same thing. Like, let's work backwards. If I have a REIT paying me $1.33 per share, and I want to make $8,000 per year, how many shares do I need to own? Okay, $8,000 divided by 1.33. I need to own about 6,000 shares. Let's say that the REIT is going for $18. I spent $108,000 to be able to make $8,000 a year, and I don't have to worry about my tenant not paying rent on time. I don't have to worry about having to fix a fridge because it's broken. I don't have to worry about fixing an AC. I don't have to worry about them being behind. I don't have to worry about a mortgage. I don't have to worry about any of that stuff. So guys, let's not sleep on dividends and REITs. This is a way for you to invest in real estate without having to own land, without having to have $300,000 or $80,000 to put down. Well, Kat, you just told me you spent $103,000 on the REIT. Well, if you're starting with 1,000, you pack on those shares, okay? You get a couple of shares this month. You get another couple of shares next month, so on and so forth. Next thing you know, 5 years later, you're sitting on $100,000 worth of it. That's making you $8,000 every single year without batting an eye. All right? That's the power of REITs. That's REITs. A second way to invest in real estate without necessarily having the money, if it's not, without having hundreds of $1,000s, or if you only have 1,000, is to invest in a real estate stock, something like Zillow. Okay, last year Zillow did 100% return. So if you put $1,000 into Zillow, your $1,000 would be $2,000. Okay, Kimco Realty, Century 21, right? These are all types of real estate related stocks. Okay, so you don't have to tie up a lot of money. You can still invest. Another way to invest, yes, you can also reinvest the dividends as well. That's called DRIP. Good job, Lakeisha. All right, the next way is through crowdfunding. Okay, you guys have heard. How many of you guys type in a one if you've heard of GoFundMe? Type in a one if you've heard of GoFundMe. Okay, I try to keep these short, but it just doesn't. It never happens that way. But whatever. I have to continue. Okay, type in a one if you've heard of crowdfunding, GoFundMe. Okay, type in a one if you've heard of GoFundMe. So GoFundMe, what usually happens? Somebody dies or somebody's sick. There was one somebody posted on the group here. They talked about somebody had a GoFundMe to help them pay back their PPP loan. That's funny, right? So that's crowdfunding. So imagine instead of somebody's funeral that you're contributing to, or somebody's travel fund, or somebody's PPP loan fund, imagine somebody puts a property that says, hey, this property is worth $300,000. We're looking for people to fund this property, to buy it. Okay, that is called crowdfunding for real estate. Okay, some example are Fundrise. Fundrise is an example. Now I have someone, Omi, the real estate investor that I'm gonna have on. He's not a big fan of Fundrise, but hey, that's him. That's him and his goals. Take a look at companies like Fundrise, where you could put $500, you could put $1,000, and be part owner of a building, part owner of a house, part owner of a hospital, part owner of a shopping plaza, right? With just $1,000. These are all things that are available to you. All right. Any questions, guys? Any questions? Okay, so first one was equity. First asset class is equity. So if you have less than $1,000 or 1,000, you can buy and sell stocks. There are plenty of stocks that are worth less than 1,000. Okay, you can buy ETFs as well. Second way is the bond. A second one is the debt. Right? So yes, you may not have $1 million to lend to the government, but you may have $100 to buy a bond ETF. Voila. Okay. Cash equivalents. Okay, cash equivalents, yes, they give you that liquidity, but they're also making you money as well. It's not a lot, but it's a good place to park your money without losing the value of the money, without collecting dust, but still have that liquidity. The fourth one is real estate. Obviously, you can buy a building, you could buy residential properties, and so on and so forth. If you don't have the money, if you have less than 1,000, you can invest in a REIT, okay? Or you can invest in crowdfunding like Fundrise. So crowdfunding is essentially the same as the REITs, except crowdfunding is more private deals. The REITs are public deals, which is why it's found on the stock market, publicly traded. Okay? Fundrise, some companies like Fundrise is the same thing. Okay? But just private deals. All right. Last asset class is called alternative assets. Okay? Alternative assets. These include your precious metals like gold, silver, bronze. These include your foreign exchange, right? Your forex. It also includes your cryptocurrency. Voila! You guys are all asking me what cryptocurrencies to invest in, right? I have a cryptocurrency class that tells you exactly what to do. Exactly. Every student that has followed it has made money. Okay? As a matter of fact, I've been following it for about 2.5 months. Oh, my Bitcoin. Bitcoin's at 50,000. Buy the dip, baby. Okay. I started it two months. I started it because I wanted to show you guys that this stuff is easy. 2 months, 2.5 months, I've been doing this. I literally do exactly what Jeremy Newsom says. I'm not going to give it away on a free live because there is a class for it. I did it for 2 months, guys, 2 months. And it's not a lot of money. I'm investing $100 a week. That's $400 a month. This stuff is not hard. You guys are overcomplicating it. You're making it harder than it needs to be. This stuff is not hard. Okay? All right, cool. Alternative assets. Okay. So with alternative, actually no, I lied. It hasn't been 2 months. It's been 3 months. I'm sorry. It's been 3 months. I want to tell you the right stuff. Because when was the class? February? Late February? It was late February. And I started like that February, because February, yeah, the last week. So March, April, we're not even done with April. So yeah, it's been 2.5 months. We're not even done with April. Yeah, 2.5 months, guys. $100 a week. You saw my account. I can't make this up, guys. I can't. It's really that easy. Okay. All right. Alternative assets. Precious. Okay. So you have precious metals, cryptocurrency. Let's talk about cryptocurrency. Okay, so some of the ways to invest in cryptocurrency. You can download Coinbase. Okay, as a matter of fact, let me put in my link. Okay, if you guys click on this link here that I'm about to put, okay, you're both you and I get 10 Bitcoin. Okay, so I've had about 5 people use the link, and I got about $50 worth of Bitcoin. Okay, doesn't seem like a lot right now, but when Bitcoin hits 100K, hey. Now it's a big deal. Okay, so go ahead and use that. You can use Coinbase. Now, with cryptocurrency, if you use a wallet, you own your cryptocurrency forever. If you use an exchange like Robinhood, like TD Ameritrade, like Fidelity, well, TD Ameritrade doesn't do crypto, but like Robinhood or Tasty Trade. Tasty Trades does crypto. Okay, you have the right to buy and sell the crypto. You do not own the crypto. So if you're just trying to buy and sell, if you're just trying to hit it and quit it and trade it, then you can use Robinhood and you can use Tasty Trades or any other trading platform. But if you want to own the crypto, be an owner, okay, you need a wallet. So one example is Coinbase. Why do I like Coinbase? Coinbase is FDIC insured. No, I'm not endorsed with Coinbase. No, Coinbase doesn't pay me or any of that. I should be getting paid, but it is FDIC insured. We're here to grow 7 to 8 figure portfolios, guys. Okay, so we need to be in safe environments. We need our money to be safe. So if something is FDIC insured, don't you think I'm going to tell you about it? Absolutely. Okay, so use Coinbase. Another one that other people use is Binance. Binance, you're going to need a VPN if you want to get some of these coins that are not available in the US or in your state. If you need more help with that, book a consultation with me and I'll talk to you about that. Okay, you can also use Uphold. Right? There's a whole bunch of other stuff. You guys can contact Erickson or you can contact me or Jeremy Newsom, whichever one. It doesn't matter to me. There's plenty out there for everybody to eat. I'm not selfish. I don't need everybody to come to me. As a matter of fact, I'm not for everybody. You guys know this. My personality is not for everybody. So you go to Erickson, Jeremy, or myself, or someone else who has done cryptocurrency for a while and who understands that world. Okay? So you want a wallet to own it, and you can use a platform like Robinhood to buy and sell it. Any questions on cryptocurrency? I used yours last week. Okay, Suzette, that's what I'm talking about. Did you get your 10K? Your 10K. Hello, speaking into existence. Okay. Alrighty. So another type of alternative asset is fine arts. Okay, so that would be artwork, right? Some of these artworks are going to be worth thousands of dollars, right? Start investing into your artists. NFTs is another one. That's like virtual art. Take a look at NFTs. NFTs is up and coming. If you're invested into cryptocurrency, you probably want to look into NFTs as well. Okay, that's virtual art, virtual stuff. Okay, hedge funds. Okay, with most hedge funds, you need a minimum of $10,000 to start one. But hedge funds basically use things like stock options, derivatives, futures, things that mutual fund managers are not allowed to use. So hedge funds managers are allowed to use more risky things to grow your money faster. So typically, if you're a risk lover and you have a lot of money and you don't have the time, you want it managed for you, a hedge fund might be right for you. Okay, and then we get into the derivatives. So a derivative derives from something else. Okay, a derivative derives from something else. So that would be like a stock option. Yes, you do not own the stock itself, but you have an option on it. You have the right to buy it or the right to sell it. Okay, so again, we're gonna do a let me put the link again. Those of you who want to learn how to leverage your portfolio, especially if you're trading with less than $1,000, stock options is probably one of the best routes for you. Okay, why? Because it allows you to control hundreds of shares with very little capital. Okay, it allows you to leverage your account. So yes, you could spend $200 and make 200 and double your money, triple your money, quadruple your money. These are all things that are possible with stock options. Okay, so Jeremy Newsom and I are having a stock options webinar tomorrow. Jeremy's teaching for 2 hours and I'm teaching for another 2. So here's the link there. Go ahead and register. Okay. So we'll wrap it all up. Okay. So Katiana, I have $1,000. Okay. I have $1,000 to my name and I want to know what to do with it. Okay. Actually, let's role play. Who wants to come on live with me? Go ahead and request to be live on me with me. Live on me. Hello. Where is my mind? What time is live with me? With, not on me. Who wants to be live with me? We're gonna role play. I want to role play with somebody. We're gonna role play and pretend that you have $1,000 and you want to get started. So we're gonna role play. So go ahead and request. Let's see who wants to do this. Who wants to go live with me? While you guys, yes for options. Yes, Marie. Yes. But risky. Yes, options can be risky, and that's why Jeremy Newsom and I are going to teach you. Yes, right. That's another live. Absolutely. All right. Anybody want to role play with me? All right. Maybe I can add someone. Let's see. Alrighty. Let's see. Who wants to come live with me? Anybody? You guys shy? Emiel says me. Request it. Where are you? Emiel. You got to request me because I don't see you on here. I see Shayna. I see Sandra. Shayna, do you want to come on? Shayna? Let's do Shayna because she's here. Okay. All right. Let's see if Shayna wants to come on. Shayna, let me know if you want to come on. I wouldn't be at my work. Okay. Shayna's not answering. Sure. Okay. I added you. Did you get it? Let me see. It says adding. Let's see here. No, it's not working. All right, let's try someone else. It's still adding. All right, guys. So while we wait on that, it's not working. All right. So while we wait on that, any questions, guys? I guess I'll role play another time. Let's see. Let me try someone else. Let's see. No? Okay. Any questions, guys? Any questions? Go ahead and type in your questions because I'm about to be done. Okay. So anyway, while you guys type your questions, just to I'm trying to update settings. Oh, okay. Okay, no worries. You're fine. I'll do this another time. Actually, I might do that on Saturday or something when I have some time. Okay. So if you have $1,000, where do you start? You start with your goal. What is your goal? Well, Kat, my goal is retirement. Okay, beautiful. How much time do you have until you retire? Oh, I have about 15 years until I retire. Beautiful. Awesome. So would you rather pay taxes now or would you rather pay taxes at retirement? I don't know which one is better. Okay, well, do you know what taxes are going to be like when you retire? No, I don't. All right, so would you rather pay taxes now? Yeah, let me tell you, pay taxes now. So you're going to open a Roth IRA. All right, next, do you have time? Do you want to be an active investor or a passive investor? Well, Kat, I have 3 kids. I have a full-time job. I don't know if I have the time. I don't know about that. Okay, all right. So some options for you might be to is it working now, Shayna? Let's try one more time. Okay, I'm just gonna try one more time, but whatever, right? Okay, so if you don't have the time, so some options for you might be, hey, maybe some individual stocks like Apple, Microsoft, Disney, right? Those might be good where you buy those every single month, or maybe an ETF like VOO, VGT, VTI, right? Maybe you buy those every single month. All right. Well, Kat, what if I don't want to just invest in stocks? What if I want to invest in real estate as well? Well, you can buy a real estate ETF, you can buy real estate stocks, you can buy a REIT, you can invest in a REIT every month, or you can purchase some land or some properties. You only have $1,000, so I don't know if you'll be able to get a property at the 1,000, but maybe some land, right? Kat, what else can I do with $1,000? You can also buy a bond ETF and get a basket of bonds to have some of your money protected, right? Or you can lend money to a municipality. You can lend money to the government, right? Well, Kat, I don't know if I want to tie up my money. Well, you can also put it in a money market account while you figure out what to do while you're studying, while you're taking courses, whatever the case is, and you don't want your money to just be sitting there collecting dust. You can put it in a money market account and at least make some money. Okay. Or you could put it into a life insurance program and have that money grow for you. Oh, Shayna, there you are. Okay. I just approved you. Let's see. Approve. Can't bring Shayna on camera. They're already a guest. Okay, hold on. I got to take that out. Okay. Shayna, try that again. Let's see. Approve. What happened? It's saying I can't add you. Nah. Oh well. I tried. Okay. So you could also put it in a life insurance program where you're collecting dividends every single month and maybe you're ready to add another $100 a month to that. That's possible as well. All right. Well, Kat, what about some alternative assets? What about crypto? What crypto should I do? Well, how do you analyze crypto? Right? What is the project? Is the project a sound? Is it reliable? Does it have a future? Right? Is it profitable currently? Does it have the potential? Is it tied to another crypto that's profitable? Right? You want to take a look at that and then decide if you want to buy and hold that. All right. You can also look at some stock options, some futures. You can buy some art. Okay. You can even buy some precious metals or some gold. Any questions, guys? Any questions? That option has been glitching on Facebook lately. Oh, okay. Okay. Thank you. Thank you for that. All right, cool. So I'll try that another time. All right, guys, that's pretty much it. I talked for way too long, right? So that is how we invest with less than $1,000. Type in a one if you guys learned something. Type in a one if you know exactly where you're gonna get started with your $1,000. Type in a one if you learned if you found out about a new way to invest that you never thought of before. Okay. Danielle says one. All right. Any other ones? That's the only one, Danielle. All right. Charlene, thank you. Thank you. All right. Nakisha, thank you. Thank you. All right, guys. Have a good night. Thank you for sticking with me throughout the whole almost 2 hours. Okay. Charlene says Suzette. All right, guys. So start with your goal. Be responsible with your 1,000, and let's get you to 7 to 8 figures. Okay. All right, guys. Bye bye.